It's Quant Trade Edge, and today is Thursday, May 9th. Today I'm doing a video earlier than usual because I am sort of sitting on my hands with this breakout position. I don't want to overtrade it. This is silver, and you can see that yesterday we had the completion of a 3-bar triangle. And a 3-bar triangle just means that the day's range is inside the sum of the previous 2 days' range. Some 3-bar triangles are are more overlapping. This one took place in the upper half of the, I call that the mother bar, and that typically means you're going to get continuation in the same direction. Just checking to see if we really are above the 50. Yes, we are completely above the midway point of that bar. So that typically biases the breakout to the upside, and I'll take these off, but also note that there was a point of significant resistance right there at 29.02.5. I'll take these off now as we go down to the lower time frame because I want to show you something interesting that happened off of that. And remember, with our classic Forex trade, we're looking at previous day high, previous day low, but also when significant resistance gets taken out, or significant support gets taken out, that triggers noise. And by noise, I mean an ABC, hoagie, some sort of consolidation. And, you know, again, going back to Peter Brandt's interview in Unknown Market Wizards, he talks about how he thinks the algorithms are doing that, and that didn't used to exist in the 80s. In the 80s, you'd break out and just go straight. As we come down to the 5-minute, we can see that when that level got taken out, it rallied up, and then we got this big fake out. And the thing about this big fake out is you did technically take out that last flag, you know, that last flat flag area, which can sometimes trigger a much bigger down move. And so that was a bit of noise that perhaps got some people out of their longs, that maybe even got some people short. And when that failed, that really burned it to the upside. And really all we're doing now is just consolidating here, and I think we have more to go, you know, whether that be today or tomorrow. I think there is more room to go to the upside on silver here. I wanted to point out a couple of key characteristics of this final flag that maybe will help us distinguish it from the really good flat flag that we had on, I think it was April 12th right here, April 12th, where, you know, we got like $1.30, you know, of downside from that flag. And one of the differences here is that this is a, you know, looks like a cup and handle. It's a longer term consolidation pattern with a little VCP, volatility compression pattern here at the end, contraction pattern at the end. And then also it took a little longer here. You know, we took 1, 2, 3, 4, 5, 6, 7, you know, we spent 3, 4 bars just going sideways there, and then 1, 2, 3 bars to the downside to take out that flag. When we have a final flag, we typically want it to be in a runaway move. You don't necessarily want it to be part of the consolidation. And you also want to have this move out be very quick and the failure be very quick. So there are a couple of warning signs on this, but you know, I actually did get out of my short position just, you know, recently, you know, being exposed to how well this pattern worked. But I did get back in. I'm not too proud to say I was wrong and miss some of it. And really, the fact that we got noise of this extent that shook the trees really hard by going below that last flag gives me that much more confidence that this up move is going to be better. Now let's go back to April 12th, and so we can actually look at the and we can contrast how that final flag looked, you know, the one that was very successful. And this is that day where, you know, we had this big long consolidation right here. And in my previous video, I went over gold. I don't think that I went over silver, so this should be new material here. And then here, this is basically your final flag probably from there down to here. And notice, first of all, we had it's called a running consolidation, where it's actually going higher even though it's consolidating. And then we had this final flag, and then 1 2 bars up, 1 2 bars down, and it was broken. And that was your short signal that led to a massive return on your risk capital there. So probably about $1.30 or more down this way. So, going back to today, just to freshen that up again. This was that consolidation move, and then we didn't have a running consolidation, and we did take a lot longer. 1 2, this one really broke out. 1 2 3 4 5 6 7 8 9 bars, and then before you had that, and then the other thing to note is that this time of day was also around the open, 8:25 to 8:30 right here. And the open, just like when you tag a swing level, you tag PDH, PDL, the open time, or when there's news, those are all times when there's a lot of volatility and noise. So a couple of things that I could have been watching closer to surmise that this would be a false move. But either way, shoot first, ask questions later. I exited and then re-entered. And then again, I do believe that the fact that this failure pattern failed means the move in the original direction is going to be that much better. So anyway, this is still a fairly young pattern. This, when you go back to the daily, this is the first day of the breakout. And when you get a breakout of this nature, you can typically go 2 to 3 days without much retracement. And my first target on this would just be the fib extension off of that high. So I think we take out that spike high on April 12th. It'll be, it's already the 9th, so within a couple of days it'll be the 12th. We would have been in this consolidation for a month, and start looking at upside extensions. 31.25, 32.60. So anyway, that is silver today. Gold did a very similar thing. It has a more muted 3-bar pattern. I'll blow this up so you can see it really well. Both of these are inside of the original bar, so it's technically a hoagie, but then we did break to the upside of that. So I would expect a similar move over here. And this also did the little screw job on the failed flag. In this situation, this kind of would have been your failed flag right here. We got back down below it, but didn't spend much time there, and rallied forward. And this is also putting in a continuation type pattern. Not sure exactly how you draw it, but some type of consolidations going on up here, which I think will lead to more upside. And if you look at the GDX, which is the gold miner index, the major index, this had a very clean triangle yesterday, symmetrical triangle, and today we gapped above that triangle, and it's been a one-way street so far. So again, breaking out of a triangle like this, I would expect a few more up days, at least one more, if not 2 more up days. One of the things I'm thinking about is, with all of this unrest in the Middle East, sometimes they go extra hard on gold on Friday to preemptively, but then on Monday there's no end of world, no nuclear bombs have gone off, and sometimes give it back up. So depending on how we act tomorrow, I might take some of the position off there. But from a pure technical standpoint, this should have more, many more days of rally left in it. So anyway, that is just a brief update on silver and gold and the related equities. I'll give you one more little gem here. Wheaton Precious Metals. That is my favorite silver equity because it's a royalty. A royalty is just a pure leveraged play on the price of silver, as opposed to a silver miner who they have operational risk. as inflation kicks up and energy prices go up, their costs go up. They have strikes. You have all kinds of physical issues. Whereas royalty companies just sit around and collect a percentage of the commodity that comes out of a mine, and they diversify across many mines. And what's beautiful about this is a long-term pattern. It's almost like you got this head shoulder, like a big shoulder, head shoulder, or the shoulder itself is kind of like a double bottom, and gives you plenty of upside move. But here you have this beautiful triangle that we had up into yesterday, and today we've gapped up above that. So maybe be on the lookout if you get a nice little push back down. Tomorrow or this evening is earnings in this stock, and that's the only reason I didn't add to my position today. But if we're lucky enough to get some sort of shakeout tomorrow, that would be a great place to buy it. So anyway, we've gone over silver, gold, GDX, and now WPM, and see how this plays out. Oh, and by the way, if you like this type of analysis, this is what we do in our Discord. I'll put a Discord link in the description to the video, and I'll link the video with the failed flags on the end screen also, so you can go look at that one as it was described in real time.